These companies have each seen their stocks rise more than 25% so far in 2023. Palo Alto Networks. This cybersecurity concern's stock is already up 40% on the year. CrowdStrike. Analysts say strong growth potential justifies a rich valuation for this stock. Fortinet. Demand for this company's firewall protections is only growing stronger. Let's dive in. Here are the 3 cybersecurity stocks with huge return potential for long-term investors. Welcome to Timely Investment Research. The cybersecurity sector is hot and will continue to get even hotter. Demand for more advanced and complete cybersecurity services is growing among consumers and companies as threats to data and sensitive online information grows. According to market research firm Statista, revenue in the global cybersecurity market is forecast to grow at a compound annual growth rate of 10% between this year and 2028, bringing the total annual spend to $256.50 billion. This year alone, companies around the world are expected to invest an average of $46.54 per employee on their cybersecurity needs at work. And that sum is projected to rise steadily as more sophisticated protections are needed. For these reasons, it is a great time for investors to own cybersecurity stocks. Shares of leading cybersecurity companies have been marching higher this year on expectations of their current and future growth. Here are 3 cybersecurity stocks with huge return potential for long-term investors. Number 1. Palo Alto Networks. Like most technology stocks, cybersecurity concern Palo Alto Networks had a difficult time in 2022. However, the stock has mostly erased its losses from the past year thanks to a 40% year-to-date rally. Palo Alto Networks stock is now only 4% lower than where it was trading at 12 months ago. The shares bottomed on January 10 and have rocketed upwards ever since, fueled by solid earnings growth and strong free cash flow generation. In late February, the company announced a strong earnings beat and lifted its forward guidance. Palo Alto reported earnings per share of $1.05, which was well ahead of the 78 cents a share consensus forecast of analysts who cover the company. The company also called for $3.97 to $4.03 in earnings per share for all of this year, up from previous guidance of $3.37 to $3.44. Palo Alto also continues to expand its cybersecurity offerings through acquisitions, recently completing a $195 million purchase of Cybersecurity. Number 2. CrowdStrike. Another leading cybersecurity stock that is still recovering from a huge sell-off last year is CrowdStrike. Similar to Palo Alto Networks, CrowdStrike stock has had a big run this year, having gained 28% since January. However, despite the rally, CrowdStrike stock remains 39% below where it was 12 months ago. Much of the downturn in the company's share price stems from overvaluation. Even with the big sell-off of the past year, CrowdStrike stock currently trades at a forward price-to-earnings ratio of more than 50, which isn't cheap. Yet fans of the company claim that CrowdStrike stock's rich valuation is justified given its continued growth. In its last fiscal year, CrowdStrike reported that it grew its customer base 41% year-over-year to 23,019. More than half of Fortune 500 companies are now clients of CrowdStrike and counting. The consensus view of analysts is for the company to grow its revenue 73% to $3.87 billion by 2025. Additionally, CrowdStrike is forecast to grow its earnings by 56% a year for the next 5 years. That sort of growth would be impressive. Number 3. Fortinet. For a cybersecurity stock that is actually up on the year, check out Fortinet. The company's stock has gained 36% yield, pushing it into the green by 2% over the past 12 months. Fortinet, which focuses on firewalls and intrusion detection systems, has been going gangbusters as demand for cybersecurity services grows stronger. For its most recent earnings from the fourth quarter of 2022, Fortinet reported revenue of $1.28 billion, up 33% from a year ago. Earnings per share in the quarter grew 76% year-over-year to 44 cents. The earnings beat propelled Fortinet stock 15% higher in a single trading session. Ahead of the company's first quarter earnings release on May 4th, analysts at investment bank TD Cowen reiterated their buy rating on Fortinet stock and gave the shares a price target of $85, which is nearly 30% higher than where they are currently trading. According to TD Cowen, Fortinet is well positioned to continue growing as demand for cybersecurity services escalates in coming years. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.